Welcome back to the channel. I'm Crypto Trend Trader, and today we're going to be taking a look at reversal patterns. But before we get started, I do want to say that this is not financial advice. I'm not a financial advisor. I'm just sharing some of my insights on the market, some of the understanding of different patterns and how to recognize them and what they mean, and even how to trade them. Should you happen to see them and recognize them, but keep in mind this is not financial advice. Please trade responsibly. This is the Bitcoin daily chart, and we're going to be looking back here, starting first the reversal patterns. We're going to note that the red line is the stop loss, the green line is our entry point, the yellow is the neckline where applicable, and then the white line is going to be our target. Alright, so we're going to start over here on the Bitcoin chart, and this was after the parabolic move up and dump down, and what we saw here developing was the formation of an uptrend at top. We come back down and form a support, and then we come back up and form either an even top equal to where the other one was, especially candle closes, either a slightly higher top or a slightly lower top also is fine. But then we're going to come back down, and when we get to that support line, if we break through that support becomes the neckline. And if we break through that support, our entry is going to be slightly below the lowest low from this little support area, so we know if the support has broken on a candle close especially, that it's likely to dump and get continuation. So in this case, the stop loss is going to be just a little ways up above the neckline, but so we know we've clearly reversed the trend because we broke higher than our previous candle close, especially on a big candle like that. Gives you a nice range. You know if it's bouncing back up that hard that there is likely continuation. You may have not seen something. So anyway, so then our target's down here at the bottom, and the target is just the measured move equal to the first leg up. So if we're taking our entry right here, it's going to be that same distance down. And then what we're going to do is there's different points along the way you're going to want to take profits. I like to take profit, a third, half, and then final position. So you let it run a little further. You don't even have to take the last one or any of them for that matter. A lot of time you can just put in, lower your stop losses as you go, so you're guaranteed to lock in some of your profits. So essentially, even if you are wrong on the trade, a small break in your favor, like if this broke down here in your favor and you had took profits, like I said, it comes back up for the retest and continues on. The rest of the trade gets stopped out, but you didn't even take a loss because you got a free trade from the small profits that you did take along the way. So that's our double top pattern. Now we're going to move over here. We have our head and shoulders is next. And the head and shoulder pattern starts off the same way with a strong impulse up, comes back down and forms a support line, and you'll notice it's a beginning, a first triangle there, and then we'll come up, put in a high, and oftentimes you'll see a little bit of jaggedness, shakiness in here, but we'll put in a new high, and then it comes back down, and you'll see it gets close here, but you don't want to just get too greedy with it because you would have got stopped out on that. But it gets down here and forms an almost parallel. You want the whole pattern to essentially be parallel. If the whole thing is slightly slanted, that's fine, but you want to see the whole thing slanted. You don't want to just see one giant shoulder up or one tiny shoulder. You want to see symmetry in the pattern, even if it is in an angle. So when we come back down and we hit essentially forming the neckline or solidifying the neckline, we come back up and you'll see we sell off almost at the exact same point. And that's very common to happen, but it doesn't necessarily mean it's a head and shoulders. A lot of times it'll be a fake out, come back down, spring break, and then take off to a new high. So that's why you need to trade responsibly and have stop losses in place. But anyway, so what we're going to do here is we're going to put our stop loss after we come down here. The entry will be just below the neckline once we've clearly broken through the structure to the downside. The stop loss will be above where we broke out from here. It doesn't necessarily need to be above this because we know if we come back up that strongly that it's going to invalidate the pattern. It's not going to look right. It won't be symmetrical. So we're fine. We'll get stopped out, take a loss on to the next. And then the target is again just going to be the leg down. It's going to be the same distance from where we broke down over, and then again in this case you'll see if you would have took profits right here, it would have come back up, wouldn't have hit your stop loss, but you may have moved some of your stops here and got stopped out. You may have left them all in place. In the meantime, that's why you want to take some of your profits first, and then you don't have to worry about if it comes back up and you get stopped out here, you don't get taken out of a trade like this. And then here you would have took half here, and then you would have let some run. The way that sold off so powerfully, if you would have done like I said and just put a trailing stop in as it broke away, no way you would have got hit, and you would have got a hold of this whole piece, not just the measured move. So that's our head and shoulders pattern. And then again, we're just going to say this are reversal patterns here, and we're looking at the stop loss is red, the entry is green, the neckline is orange, and the target is yellow. So we're on the Bitcoin chart here again. We're going to go to our last pattern for today, the rising wedge. And you'll notice here with the rising wedge, again, we have an impulse up, and you can take the impulse from wherever looks reasonable. You don't want to pull it all the way from back here. Pull it from this little wave right here, this little impulse. And you'll see price bounce around inside of here. Now look, we got a massive wick down here, and this is fine. This can happen. It does happen, especially depending on the exchange that you're on, liquidity issues, maybe not liquidity issues. It could be a stop hunt. A lot of things can happen. That's fine. We're looking at candle closes, and you'll see we clearly form this wedge, and we start respecting it almost immediately. So you can trade it. We almost have a fake breakout. You could adjust it a little bit. I might have just put it a little tight there. But you kind of have a fake breakout. It comes back over, and then you'll see we finally do break out of here, confirmation out, and you're going to take that entry right here, and you're going to trade the measured move, which is essentially the meat of the wedge, over here, and that's going to take us down to our, a lot of times you'll see it play out in confluence with support. So this area was a key support line. We broke above it, and when the wedge played out, we came back to it, found support again. And you'll see the stop loss was up here, so if we did break to the upside without the sell-off, that's fine. But in this case, we did move way up after that, so you would have got a reversal off this anyway. But the moves don't look very big in this case, but you'll see that's actually like an 11% move. The ones over here are even bigger. It's just because I'm on the daily and it's such a blown up chart. This one was a 17% move to the downside, and this was an even bigger one, 26% move to the downside. So you'll see these play out. They play out often. They don't always play out. You know, people will say, oh, patterns never play out, da da da. It's important to know how to trade them, and then regardless of whether they play out, you can play them to either direction. But a lot of times these patterns will play out. A lot of times market makers will paint them to fake people out, and that's why it's important to wait for wait for candle closes, wait for confirmation. It's important to place your stop losses and your entries in the correct places. A lot of times I will place a second entry where I would put my stop loss at, and then I'll put my stop loss a little higher because I'm costed into the trade. So if it gets up to where I would have got stopped out at, sometimes in that case that'll be the hunt because it's in a common place, and then you'll get a small entry there, or you can put a stop loss on that one and have it enter and then see what happens. Sometimes it'll play out. Sometimes you throw away a little, 2% or whatever of a small percent of your account. Again, we're just talking a couple bucks here. But oftentimes it works out very well, especially when you see a pattern come in where you put in a high and then start coming down. Here's a perfect example. You come up, you put in a high, and then you start coming down, and then it looks bearish and people start shorting into this, and then they put their stop loss higher than this candle. So if the price goes higher than that, they say, oh, we're going up. So what happens is the hunt will come up, it will come slightly higher, stop them out, use the fuel from their stop loss to then dump the price down here. And then you were correct about direction, but you missed the entire trade because of your stop loss. In this case, you would enter your trade, and then instead of putting when it started dumping or wherever you were going in from, instead of putting your stop loss slightly higher, you would put a second entry up above where you would have put your stop loss, and then you just move your stop loss for both of them up slightly higher. So even if you get this one, first trade may have like a 5 or 6 or 8% stop loss, whatever, but then the second trade is going to have a much smaller stop loss, and because it's getting filled at a larger price, it averages out the two of them to where you end up with like a 3% stop loss or 4% stop loss, or depending on the numbers you use specifically. But that's just a technique that's worked very well. Essentially if you feel like you keep getting faked out, it works really well to make sure you get in those trades that you keep getting stopped out of. So anyway, thanks again for taking a look at the reversal patterns today. I'm Crypto Trend Trader. Today we looked at the Bitcoin chart. We learned about the double top, the head and shoulders, and then finally the rising wedge reversal patterns, and proof that they do in fact work in cryptocurrency. These were all amazing trades. Oftentimes too, you can get into a good trade, you can stay in that trade for a long time and not even worry about ever coming back up and getting stopped out. At least a portion of it you can let run, because you'll find people always say, oh, take profits early and often, and while that is correct, you'll also hear people say, cut your losers short and let your winners ride. And that's the key, because what happens in cryptocurrency especially is, if you would have took this short right here and then you get down here, you decide you're going to take profits, it bounces up a little bit and then just keeps dumping and you miss this whole entire trade. You would have been much better off if you would have just not been greedy with it and just put your stop loss back up at a respectable area, that if it came back up and broke through that area, you knew that in fact the trend was reversing and you want to be out of the trade. So anyway, thanks a lot for coming back, guys. I am Crypto Trend Trader. If you enjoyed what you saw in the video today, if you learned something, if you have any questions, comments, critiques, something you want to take a look at in the future, or you're interested in a specific trade setup for a specific coin or chart, please let me know and I'd be glad to take a look at that for you. So that's it for today, guys. Bitcoin reversal patterns, or really just technical analysis reversal patterns, but we're looking at Bitcoin. I'm Crypto Trend Trader signing off.